Taxes are unavoidable in most countries, but some places around the world are known for having little to no income tax. If you've been looking to move abroad, but you put it off because of the high tax rates in many countries, you should reconsider your options. After all, there are many countries that don't have any income tax at all. While there are several countries around the world that have no personal income tax, these 10 have no corporate or business income tax either. These countries don't collect taxes from your business activities or personal salary, meaning you can keep 100% of your hard-earned money and invest it towards growing your new business and saving for retirement. With all the worry about taxes these days, it can be hard to think of places where you don't have to pay taxes. But there are plenty of countries around the world where you don't have to worry about your taxes. Consider moving to one of these tax-free countries if you want to save money on your yearly income taxes and still enjoy an amazing quality of life. From North America to Europe and the rest of the world, in no particular order, here are great 10 countries with no tax you might want to consider. Number 1. Andorra. Andorra is a small country sandwiched between France and Spain that few people outside of Europe have heard of. Even fewer are aware that it's also one of only a handful countries in Europe that doesn't collect income tax, though there is a small property tax. This means you can live and work in Andorra without paying taxes on your earned income. According to recent statistics, over 70% of citizens living in Andorra hold both Spanish and French passports. This gives them even more mobility in regards to location and allows them access to many other parts of Europe as well. Andorra has a pretty sweet deal for expats: no taxes. Unlike some countries with no income tax, Andorra does have a sales tax, 4.5%, but it's on par with VAT in other parts of Europe, so it shouldn't throw off your shopping plans too much. Income from investments can be taxed at 5%, and capital gains from selling property after just 5 years are taxed at 15%. Be sure to check out Bankrate's guide on how international citizens can open an account abroad before moving there. Number 2. Kuwait. Not surprisingly, Kuwait City is a bustling city. It has more than 3.3 million people living in an area of just over 580 square miles. But even with its population of expats, Kuwait taxes residents on income made outside of their home country. However, if you make less than $125,000 per year, you're off the hook for tax. Additionally, U.S.-based companies don't have to pay corporate taxes on revenue earned from overseas operations conducted in Kuwaiti territory. Kuwait also offers incentives for foreign companies that produce locally and employ at least 50 local workers. They can earn a 5-year exemption from corporate taxes and customs duties, as well as up to 25% corporate tax reduction. Located in Southwest Asia, bordering Iraq and Saudi Arabia, Kuwait has a population of 4.2 million and a total area of 17,818 square kilometers. The country has been occupied by Britain since 1899 and became independent in 1961. Income tax is non-existent in Kuwait, meaning citizens don't have to worry about filling out paperwork or submitting payments during tax season. Residents are exempt from taxes on salaries, profits from real estate sales, and dividends from stocks and bonds. There is also no corporate income tax either, so businesses save lots of money when setting up shop. In addition to an abundance of natural resources, Kuwait relies heavily on oil as its main source of revenue. Oil exports bring in billions annually. Number 3. Monaco. In 2005, it had a GDP of $5.33 billion and ranked at number 245 in terms of its per capita income, $38,111. There are no income tax, corporate tax, inheritance tax on property, capital gains taxes, value-added taxes, nor wealth taxes, but is one of the most expensive places in which to live. However, if you are a high-income millionaire looking for a place with very low taxes but not quite ready to become a full resident, known as a non-dom, it's hard to beat Monaco. If you're going to avoid paying taxes, it might as well be in a country that really values tax avoidance. It's no wonder Monaco, population 35,000, consistently tops lists of tax-free countries. Monaco doesn't have an unemployment rate and is tucked away on France's border with Italy and France. There aren't a lot of reasons for locals or visitors to leave either. The main industries are banking. It is home to some 70 banks, tourism, and yachting, and some say it has ties with organized crime as well. Number 4. St. Vincent and the Grenadines. The tiny Caribbean nation, which is surrounded by just 3 other countries, Dominica, St. Lucia, and St. Kitts and Nevis, has a small population of under 100,000 people, but an economy that's growing faster than just about anywhere else in Latin America. As a matter of fact, its gross domestic product, GDP, growth for 2013 was an incredible 8.5%, leading it to be ranked as one of the World Bank's top 10 economic reformers. This impressive accomplishment wasn't some lucky fluke. It was largely due to major legislative changes that made doing business easier in St. Vincent and also incentivized companies with tax holidays and exemptions on corporate income tax. The St. Vincent and Grenadines are among some of the world's best-known tax havens. Foreigners can receive a local tax number without having to ever set foot in St. Vincent, and they are not required to pay income or capital gains taxes on foreign earnings. There is no corporate income tax on international companies incorporated within St. Vincent and no capital gains tax for individuals, although there is a wealth tax if you're interested in that sort of thing. And with no inheritance tax, if you want your children to benefit from your wealth after death, there are few better places than St. Vincent for setting up an offshore trust. Number 5. Bahamas. Thanks to a loophole in its constitution, foreign investors who purchase property in the Bahamas do not have to pay capital gains tax or income tax on their holdings. To take advantage of this, however, you must reside in the Bahamas for at least 183 days per year and invest a minimum of $400,000 into real estate. It may be difficult for some travelers to make use of these provisions, due primarily to cost, but there are workarounds for those who can afford it. Paired with no inheritance taxes and relatively low property taxes, the Bahamas may be just what you're looking for if your goal is achieving financial independence. Plus, it's quite nice there. In terms of travel destinations, the Bahamas holds an undeniable allure for many people. And with its tropical beaches and virtually endless list of things to do, it's easy to see why people flock here year after year. What you may not realize is that a lot of people choose to make the Bahamas their home and pay absolutely no income tax. Yes, you read that right. It's possible to live in one of these beautiful islands and have your salary sent directly back home. Go ahead and take advantage. There are plenty of reasons why you might want or need to move here. Number 6. Qatar. There's no income tax in Qatar, and capital gains are also exempted. That said, there is a 5% corporation tax that companies have to pay and high import duties on foreign products. The no tax on income policy applies only to local residents. Expats working here will be taxed according to their terms of employment. The fastest growing economy in 2016 is Qatar, according to the World Bank. Thanks to its booming oil and gas industries, Qatar's GDP is expected to grow by 6.5% next year. As such, workers are in demand, and there are no income taxes for employees or employers. If you're a high-income earner making more than $200,000 annually, though, you'll have to pay an extra 5% on your earnings. There is also no capital gains tax on equities, the difference between buying and selling stock. But there are very high taxes on luxury goods like cars that cost over $55,000. This makes Qatar one of the top countries with no tax if you plan on traveling with expensive items. Number 7. Bermuda. There is no income tax on personal or corporate profits in Bermuda. The United States, by contrast, has a maximum corporate tax rate of 35% on foreign earnings and requires U.S.-based corporations to pay taxes on all of their profits, regardless of where they are earned. As a result, some companies have chosen to reincorporate in Bermuda since 2010, including Walmart. Other companies benefit from loopholes that allow them to reduce their effective tax rates by sending money through their offshore subsidiaries located in places like Bermuda. No income tax, no sales tax, and no capital gains tax. The U.S. dollar is used as legal tender. That makes it easy for Americans to do business there without dealing with currency exchange rates. Bermuda's corporate tax rate is 0%. And thanks to a deal negotiated between Bermuda and Britain in 1995, Bermuda has no capital gains tax on assets held for at least 10 years. In other words, if you invest $100,000 and hold it long enough, you can sell it completely tax-free. It's very common for companies doing business overseas or wealthy individuals to have bank accounts in places like Bermuda because of those 0% taxes, meaning their income is safe from Uncle Sam's prying eyes and greedy hands. Number 8. British Virgin Islands. The British Virgin Islands, PVI, is a British overseas territory located in the Caribbean Sea, north of Trinidad and Tobago. It is known for its spectacular beaches and pristine ocean environment, and has an economy based primarily on tourism, offshore financial services, and fishing. BVI attracts nearly 1 million tourists every year because of its tropical climate and beautiful beaches, like Peter Island. Citizens of all countries can visit without any visa requirements, but will need a passport valid for at least 6 months after arrival. Residents are required to have BVI status if they wish to vote or own property in BVI. All applications are considered by government officials on a case-by-case basis. BVI is a self-governing British overseas territory, and as an independent nation with no taxes, BVI is a tax haven for international businesses, especially those that involve trading. In fact, more than half of all offshore companies in existence today are registered in BVI. Individuals who want to live there can take advantage of low or no income taxes and reduced regulations. International businesses might be interested in BVI's strategic location, near some of the world's busiest shipping lanes, as well as its proximity to major trade ports in Central America and Mexico. Number 9. Marshall Islands. The only country that doesn't have an income tax, a property tax, or even a capital gains tax. They also never charge tourists, although they do have taxes on goods sold in their marketplace. To get residency status, you will need to buy a property costing at least $100,000 and either open a bank account or start a business there. The Marshall Islands are very laid back, with little crime and low cost of living. Perfect for retirees. Also, no passport required, so you can live there visa-free forever. The main industry of the Marshall Islands is tuna fishing. In fact, it's estimated that more than 60% of people in Majuro and Ebi Island live off of some form of direct or indirect economic activity related to tuna fishing. This includes traditional products like fish hooks, spear guns, and woven grass mats. While direct taxes aren't mandated by government agencies here, there are indirect forms of taxation when importing goods into Marshall's Islands, such as tariffs, taxes, and duties, taxes. Imports can be taxed at a duty rate ranging from 0 to 25%. There is also a flat tax imposed on non-Majuro residents who earn a certain amount of money per month depending on income level. Number 10. United Arab Emirate. UAE, the United Arab Emirates, are some of the most tax-free countries in the world. Since they are located on a giant supply of oil and natural gas, they don't need income taxes. Businesses also enjoy a zero corporate tax rate, although there is an annual corporate tax based on profit amounts. The city-state of Dubai is famous for its shopping centers and luxury resorts. It even has an indoor ski resort. This hub for commerce attracts expats from all over Asia and Europe who come looking for job opportunities. Those who move here may not pay income taxes, but they will end up paying higher prices than if they lived elsewhere in the region. Inflation has been increasing at 3% per year since 2012. There is virtually no crime in UAE. Everyone knows everybody else. The United Arab Emirates has a number of tax benefits that make starting your own business in Dubai very attractive. The first benefit is a 100% foreign ownership allowed, and there are no taxes on income or capital gains. There are also no exchange controls, no currency restrictions, no withholding taxes on dividends and interest, freedom of remittance and free repatriation of profits and capital. No value-added tax, VAT, sales, or withholding taxes either. Property rights are well protected under Sharia law. However, non-Muslim residents must abide by Sharia law when dealing with family issues such as marriage, divorce, and inheritance.